Good afternoon, everyone, and warm welcome to the post-budget analysis hosted by the Indo-American Chamber of Commerce. Our discussion today would be centered around the path towards achieving a Viksit Bharat 2047 vision. Reflecting on the budget's central theme, there is a notable emphasis on employment generation, skill development, agriculture reforms, and MSME sector development. The budget has sought to ensure an inclusive growth for every segment of the society by introducing multiple employment-linked incentive schemes, skill development schemes, and various reforms on the direct and indirect tax front. The government has announced various measures to foster the domestic and foreign investments with an optimistic path towards achieving the goal of Viksit Bharat. The fiscal prudent yet optimistic budget sets a promising trajectory for the country's sustainable growth and to make India the third largest economy in the world by 2030. On everyone's demand, we have been able to get the same panel of experts here today with us as we had in the interim budget to share their valuable insights on the Indian growth story and the expectations from various stakeholders. I would like to introduce Arun Khanna, Regional President, North India Council at the Indian-American Chamber of Commerce, a highly experienced technology business leader with more than 34 years of experience in the telecom and IT industry. Arun is currently the MD and CEO of AT&T Global Network Services India Private Limited. He is also a member of the B20 Task Force on Technology, Innovation, Research and Development. Additionally, he is a core member of the CII Delhi State Tech Panel. Arun, we request you to share your initial thoughts on the budget and the overall direction the Indian economy is expected to take over the next 5 to 10 years.
Thank you so much, Akhil, for that warm introduction. And good afternoon, esteemed participants and distinguished speakers. As the Regional President of the North India Council of the Indo-American Chamber of Commerce, it gives me great pleasure to welcome you all to this insightful interactive session on the post-budget analysis. Very soon, we'll be joined by our honored chief guest, none other than Mr. Raman Chopra, IRS, Joint Secretary, Tax Policy and Legislation, CBDT, Department of Revenue, Ministry of Finance, Government of India. He was actively involved in the budget formulation, and he can surely give us an insight on the rationale and the overall objective of the budget itself. Our esteemed moderator for the session is Mr. Akhil Chandna. You know him well. He is the Chairman, BFSI Committee, IACC NIC, and partner Grant Thornton Bharat LLP. And we are joined by such luminaries from the finance, tax, and business domains, such as Mr. Aseem Chawla, who is the Executive Council member IACC, and partner ASC Legal Solicitors and Advocates. Dr. Upasana Arora, Executive Council member, Indo-American Chamber of Commerce, and Managing Director, Yashoda Super Specialty Hospitals. Ms. Richa Sohani, CA, Walker, Chandiok and Company LLP. And later on, we'll also be joined by Mr. DP Singh, Deputy Managing Director and Joint CEO, SBI Funds Management Private Limited. First of all, I would like to extend our heartfelt congratulations to the Honorable Finance Minister for presenting a visionary budget. I would say that the 2024-25 budget is a testament to India's commitment to reform, growth, and inclusivity. The strategic initiatives outlined in this budget are poised to drive economic prosperity and enhance India's global standing. To me, I would say that this budget is extremely well balanced in that it seeks to keep the fiscal deficit down at 4.9% of GDP, thus maintaining the fiscal glide path that we had set upon, and yet it manages to be aggressive on the capital expenditure front. Now, that's a very difficult balancing act, and I would think that this budget really has got that balance absolutely right. The budget is a true reflection of Viksit Bharat by 2047. It really provides a good roadmap to 2047's Viksit Bharat. We appreciate that the economy is on a strong wicket and stable footing towards its journey to Viksit Bharat, so well on its way. The 9 priority areas of productivity and resilience in agriculture, employment and skilling, inclusive human resource development and social justice, manufacturing and services, urban development, energy security, infrastructure, innovation and R&D, and next generation reforms will strengthen the growth and all-inclusive development of the country. So it really sets up that charter really, really well. And I would say that all in all, it is extremely heartening to see the continued focus on four key groups of the society to achieve the goal of a Viksit Bharat. That is the farmers, the poor, the women, and the youth. Talking about the Indo-US bilateral relationship, I think that relationship stands to benefit immensely from the strategic direction set forth in this budget. The focus of ease of doing business, coupled with reforms in trade policies, will enhance bilateral trade and investment flows. As India continues to rise as a global economic powerhouse, the United States remains a crucial partner and will do so for the foreseeable future. Together, we can leverage our strengths to create a symbiotic relationship that drives growth and innovation. The Indo-American Chamber of Commerce remains committed to supporting these initiatives and fostering stronger Indo-US economic ties. I would say the current budget accelerates that movement, accelerates that bilateral, bondage, so to speak. Together, we can build a future that is prosperous, inclusive, and sustainable. I would like to stop here because I'm sure you would be more keen to hear from the experts per se. So with that, hand it back over to you, Akhil, to take it forward. Thank you.
Thanks, Mr. Khanna. I think the key words which I can take from you is visionary budget. It's a well-balanced, it's a true reflection of Viksit Bharat. 9 priorities you talked about, ease of doing business, and many other things.
Right.
Thank you for your insights. Now, let me go to our first speaker of the day, Richa Sani, who is a chartered accountant with an overall experience of 25 years in direct and indirect international taxation. She leads the direct tax technical division of the firm. As well, Richa is a fellow member of the ICI and a cost accountant. She has vast experience in handling diverse and complex issues in direct tax, international tax, and transaction advisory matters for a varied set of clients across several sectors. We welcome Dr. Raman Chopra, who has just joined us. But before we go into the Dr. Raman Chopra, I'll ask our experts to give, key themes as per them. And Richa, for you, the biggest question which comes in my mind, because you have such a vast experience of last 25 years working with big firms. So Richa, what are your initial thoughts on overall tax proposals announced by the finance minister, and especially the measures taken by the government towards abolition of buyback tax, angel tax, and acquisition levy?
Thank you everyone, and good afternoon. I think from the direct tax perspective, the biggest thing that for a takeaway from for me is the proposed comprehensive review of the Income Tax Act. So that is something which has been long overdue. Over the past several years, piecemeal changes have been made, which has made this piece of legislation fairly complex. So some simplicity and to make it short and concise is something which would really help. Now, in the current budget, focus has also been on simplifying the tax provisions, which is the capital gains, and there have been some tweaks in the TDS provisions, widening of tax base on such as TCS on luxury goods, all are very appreciable changes. The intent of the government to reduce litigation is very much evident by bringing in the tax amnesty scheme, bringing in early closure to the reassessment process by reducing the time frame from 10 to 5 years, and raising the threshold for departmental appeals. Coming on to the specifics that you've asked me, I think the biggest thing which is being appreciated is the removal of angel tax. So this is going to make the fundraising process for the startups and other closely held companies much easier. They would only need to be bothered about the FEMA floor rate. So that's one appreciable change that has come about. Equalization levy, which is the equalization 2.0 as it was being called. That is again something where there was a lot of interpretational issues. There were challenges in compliance. So that has been removed, though globally there seems to be some impediments in moving forward with the Pillar 1, but it's from a taxpayer perspective here, it is a very welcome move. Again, on the buyback tax, ever since dividend distribution tax had gone away, there was an anticipation that buyback tax also needs to be done away with. That has been taken care of here. So the gross receipts from the company in such case would be taxed at the normal slab rates, but the asset that you had procured, the share, that would now become your capital loss, which could be carried forward up to 8 years. It could be classified as short-term or long-term basis, the period of holding, and could be utilized against the future losses. So these are the significant changes. I'd just like to touch upon two things that we were anticipating, and perhaps Mr. Chopra can help us address those concerns as well. One is the roadmap for Pillar 2 implementation. That was being expected because a lot of countries across the globe have actually started those processes and brought in domestic legislation and given for stakeholder consultation. And the other one being the extension for the sunset clause for manufacturing companies. I think those were things which were really being anticipated but have not really come in. So maybe there we'd like to hear Mr. Chopra out. Thanks. I'd like to hand you back. Okay.
Thanks, Ticha. I think I've made the note of all the two things. I'll put this to Mr. Chopra whenever we go to him. Now, I quickly move in interest of the time to Mr. Aseem Chawla, who's an executive council member, IACC, and partner AS Legal, Solicitors and Advocates. So Aseem has over 2 decades of focused experience in advising on a variety of domestic and international tax, business, and legal matters. He's a member of Bar Council of India and fellow chartered accountant. So my first question to you, the government has finally taken some steps to rationalize the capital gain tax regime. So what are your thoughts on how these changes will impact the industry and investors at large?
Thank you, Akhil, and congratulations to our chamber. And we are glad that we're maintaining this convention of having this very quick post-budget, especially with the policy makers. I think we can have a long, I just quickly say that on a philosophical note, I'm not saying on a philosophical note, will this rationalization or restructuring of capital gains and various class of assets and the tax rates was much overdue. I think to that extent, the budget is bold enough to address that problem, which was being not really brushed aside. I think the opportune moment was being looked at. And I think my compliments to the entire TPL team for their efforts in bringing such a wholesome budget. And my first reactions yesterday were that this pretty much addresses every aspect of economy, every section of society, and and not only it is futuristic, it does some consolidation. It looks at present, rather stares in a very bold manner and embraces the fact that there are certain things which we need to take head on. So to that extent, my congratulations to the team, and how erudite the effort of the entire TPL team is or has been. I think I've been firsthand participating on behalf of Chamber. Also, we had some pre-budget consultation, and my compliments to Mr. Chopra in making, and he's an integral, Richa just mentioned 2 pillars of Pillar 1, Pillar 2. I think is an integral pillar of this entire document, especially from the direct taxes side. So so my one line on capital gains is the fact that this rationalization both of asset classes and rates was long overdue. Maybe the tailwind of the stock market did just help in nailing it at an opportune time. I hope it continues to stay with some measure of clarity and certainty. And I think we can have a long discourse, because I just hope that we get maximum face time from Ramanji to hear his first-hand views. And I think, Akhil, we can come back on this in a little more larger sense. There's a philosophical note on the capital gains tax side, which I think I'll be more than happy to elucidate. The short point is that the tailwind of the market, I think, was a good time to fix this, and I think this was much needed and long overdue.
Thanks, and I'll come back to you. As you rightly said, we need more face time of Mr. Ram Chopra and his thoughts on a lot of other things. Now let me go to another speaker, Dr. Upasana Arora, who's a director at Yashoda Super Specialty Hospital. As a brief introduction, Dr. Upasana Arora is the director of Yashoda, I just said, and chairperson at Bharat as well. She's the regional president of IACC North India Council and Executive Committee of SHM. She's a dynamic leader in the Indian healthcare industry and is the first Indian to be awarded the prestigious Fellowship of International Society for Quality and Accreditation. Congratulations to you, ma'am. My first question to you, overall theme as per you, how the budget is, and the second is, the second question is the Union Budget includes several proposals towards skill development with an ambitious target of scaling 41 million youth over the next 5 years. Against this backdrop, request your thoughts on the skill development vis-a-vis employment generation. Especially, please share your insights on the impact expected for the healthcare sector, which requires professional caregivers to meet the needs of a rising aging population in India. Over to you, ma'am.
Thank you, Mr. Akhil, and I welcome everyone. Actually, when I was sitting and watching TV and I was just listening to our Honorable Minister, I was really thinking that it's a wonderful budget because this budget has covered many things like startup. That is again a very big thing, and especially for youth, it was very good that they can take their education loan on a very small amount of interest. Same time, they have covered farmers also, and the best thing which for all healthcare sector is quite happy that cancer drugs are now duty free, because these days I don't know how much everyone is aware that India is going to be cancer hub, like it is already diabetes hub, and everybody in the world calls India as a diabetes hub. So now cancer is also spreading in India very fast. So for that, cancer medicines are really very expensive. So if duty free means it is going to help Aam Aadmi. And same time, there are few more things for healthcare, like X-ray is now duty free, and that it is going to be cheaper for us. So it is very helpful for healthcare sector. And when we talk about skill development, as you said, that healthcare is a sector where we actually need all the persons who has to have some good trained and good skilled staff. So for this, it is really good. And rather, this government was always talking about skill development, but in this budget, I appreciate that they are focusing on this. And what I was liking more that they are promoting those things, like they want to create Bodh Gaya place, because many countries are following Buddha and Buddhism. So, they wish to come to see those places where Buddha got nirvana. So we were not even thinking about those places. We are all the time talking about Taj Mahal and all. So now it is going to be, Bihar is going to be a next tourism place. And I think everybody who is little bit interested in Buddhism, they will go there, and Bihar is going to do very well in form of tourism. I am working for medical value travel, means medical tourism. So I think when tourism will, grow, then medical tourism will also grow, because our government is focusing on that. But if you ask me as a healthcare person, then I will appreciate this budget. And I am happy that they have actually covered every area, especially, for a middle class family, it is really good that their income tax slot has gone up from 6 to 7 lakhs. This is also helping them. Thank you so much. Over to you, Akhil.
Yeah, thank you, ma'am. You touched few important things on cancer, drug and X-ray and all. I have some follow-up questions on that. We'll come to you later. Now I'll go to our chief guest of the day, Mr. Raman Chopra, who's an IRS, Joint Secretary, Central Board of Taxes, Department of Revenue, Ministry of Finance, Government of India. Thank you, sir, for joining us. We are very happy that and delighted that you've again accepted our request. The government has been extremely proactive in seeking stakeholder inputs and taking corrective measures to bring clarity on tax and policy reforms. We have already seen that, and we would like to acknowledge the efforts taken by the government towards improving ease of compliance and ease of doing business in India. You have seen this in the current budget. The proposals are an indication that the government is actively considering stakeholder suggestions. With that, I would like to extend a warm welcome for today's session. We hope to be enlightened with your insights on some of the key budget proposals. We have a lot of questions for you. And before I come to that, you want to, set up the theme and context before we start a question answers round with you. And maybe I'll encourage my panelists, if they have some specific questions to ask. The Richa has called out. I'll ask you, but before that, we want to hear from you.
Yeah, so Akhil, just before Mr. Raman Chopra takes over, I just want to acknowledge the fact that Indo-American Chamber of Commerce was invited. And second, for all the viewers and listeners, please appreciate that Mr. Chopra's views are largely his views and may not actually represent the views. So you have to bear with some aspects. I'm sure his candor and and the way he looks at things brings a lot of confidence and gives a lot of assurance to the industry, chamber, and everybody. But please do bear with the fact that there are certain aspects. But then, as always, he's been very effervescent, and we welcome Ramanji. Thank you for being here once again.
Thank you so much. I hope it has been a very tightly working week for us in the last 1 month. The government came into place on around 10th of June, and getting the budget together in a period of around 40 days was really, really tough. And we had not sleepless nights, but working nights, you can say, because it is always sleepless despite not being working. So, but this time we had whole nights of work with the law ministry in the drafting, because everything takes time. Because once the government was in place, a stakeholder consultation, which is mandatory, had to take place. At least at about 10 meetings per day we were having in stakeholder consultations, and those meetings carried on nearly till the first week of July. And then having everything in place was tough. But finally what came out was the finance bill as such. And if you look through the finance bill, certain things are running throughout the 99 clauses which are related to direct taxes. First, there is a concerted effort of the government to show that it is listening to stakeholders. Because there are so many proposals which are actually based on suggestions. Stakeholders includes the government officers, the private enterprises, the CII, the FICCI, the American Chamber. All these institutions have been meeting us over the years. And whenever they invite me, I do go over and meet anybody and everybody who wants to hear me. But more than hearing me, as he said, that my comments are my own. Yes, they are my personal comments, whatever I'm giving here. But whatever anybody else is saying, whatever anybody else, the 100 participants are saying, they are speaking to the government. I'm listening on behalf of the government. I may be speaking on my own, but I'm listening on behalf of the government, and that is what is reflected. There are so many changes. The small change, ESOP issue, American Chambers had highlighted that small young professionals working in multinationals were suffering on account of ESOPs, and black money penalty was inordinately being imposed on such persons, whether even though had paid tax on their ESOPs, they were working on that. So it could not come through a clarificatory circular. Amendment had to be brought in. So it was brought in, and in fact, Finance Minister highlighted it in her speech that this is the reason why the amendment is made. Otherwise, to speak of it that in the Black Money Act, the amount has been raised and that has a positive context that I do not declare and still it has a positive context is a difficult proposition. So that depends on correct stakeholder feedback. Once the government gets a correct stakeholder feedback, then the government acts in a particular manner. Buyback for that matter. If you see buyback was when distribution tax was imposed on the companies, then companies adopted this route and started issuing buyback to try to get out of the whole process of taxability of this amount which is sent back to the shareholder, which was actually in the nature of dividend only. Then dividend went to the shareholder 4 years back. So naturally a correction in buyback was also expected. And along with that correction, that amount you are receiving is to be taxed at dividend, but there is a cost of acquisition. So cost of acquisition is allowed as a loss. And somebody was saying that this is unfair. I just was attending in the morning session that why are you taxing the entire amount here and giving me, I don't have any other capital gain, then where do I set off that loss? That somebody had raised it. My reply to him was straightforward. Buyback is never mandatory. It is a voluntary exercise. You're offered a buyback. If it suits you, if your income is in the slab rate of 10%, you might opt it. You have capital gains, you can set off your capital loss, you can opt for it. Because nobody is forcing buyback upon you. But at the same time, at the 20% rate, it was becoming iniquitous. Iniquitous in the sense that the promoters and the heavier shareholders who had substantial shareholding were using the company's money, the shareholders' money, the small shareholders' money to pay for the taxes of that buyback. The teacher pays for all principle. All were not benefiting from that. But simply the persons who were having a 39% tax bracket were opting to use the company for that 20% tax on buyback. So that was equitous. So second thing which runs through the budget is being equitous. That is the reason that slabs have also been revised. Salaried employees, special focus, the FM focused on salaried employees. That you need to be given some more benefits. The purpose for that was we are phasing out the old regime in such a manner that the new regime becomes sweeter. And there I come to simplicity. The focus of the government is simplicity. Simplicity in almost all provisions. Capital gain rationalization in the last 3 years. If you look up the news items which have told the government to rationalize capital gains, I think the maximum news items on direct tax are related to capital gains rationalization. You can have an actual counter. And the rationalization proposed in this budget is actually very radical. Everything listed goes to 1 year, everything unlisted goes to 2 years. I do not have to pick up the act and search through the provisos that this was bought in foreign exchange and what is this requires to be indexed. This is a zero coupon bond or not being a unit. So there were so many carve-outs and carve-outs out of carve-outs in the whole scheme of capital gains that even a knowledgeable person could not answer a straight question ke zero coupon bond ka holding period kya hai aur uski taxability kya hai. There are so many things. Debentures bought in foreign currency. What is the taxability under capital gains? You will have to search. What to remember, you will have to search the act at 4 places to actually reach that conclusion. So simplicity. The second focus of the government in the whole scheme of 99 clauses is simplicity. Try to rationalize. Rationalization in procedure has also been put in place. If you see the search provisions have been absolutely simplified. No single notice after your search, single assessment for 6 plus X years. So that is how the block period is there. So you run through that, otherwise you were facing 11 assessments, 11 notices, 11 penalties on that. Now you pay 60% tax, no penalty, you declare the undisclosed income. Again, simplicity. Reopening also, it is extremely simple now. For charities, you see, there were the 24 proviso section, the famous section, clause in section 1023C, which has 24 provisos. I don't think any other clause has even 8 provisos. So it had 24 provisos, and it was absolutely aligned with 11 and 12 in the last 4 years. So there was no reason of carrying it on. But at the same time, it has been sunset in a very soft manner, that any applications filed after this will not be considered under this section for approval. So for the smaller institutions, they continue to be exempt. It is only the approval institutions which move out of 1023C. They continue to be exempt. The smaller institutions. The institutions which were seeking approval under clause 4, 4A, 5 and 6, they move out. All others continue to remain in 1023C. And the singular regime, anybody who's dealt with charities would know that how rigid the provisions of charities had become in the last 3 years. You miss a single deadline, and you become liable to 115 TD. That means 30% of FMV is going to be taxed. So there also the condonation power has been given to the principal commissioner only, the registering authority, so that you don't have to run to the board under 119(2)B and wait for the board to condone and have your operations in a limbo for the entire time. So it will be done, and the timelines for giving you orders, registrations, they've also been rationalized. So large rationalization in charities also. See the TDS provisions. We have such a large component of refund going out from the department. We've tried to do away with the 5% rate throughout and reduce it to 2%. All rates are reduced. Whatever has been touched in the section has been reduced. So the reason for that is, let it be simple. The government again has the same simple straight mantra, let it be simple. We do not want to complicate things. And that is the headline statement of the FM also, that in the next 6 months, we propose to further simplify that. That exercise we will take up. But even with that exercise pending, the FM and the government found it an appropriate time to rationalize capital gains, which were done. And focuses on business, specific businesses. India is the largest exporter of cut and polished diamonds, largest exporter. So there, the problem which was pointed out by the stakeholders was that foreign mining companies cannot come to India and sell. So FM has announced that we will provide a safe harbor for such companies who come in and sell at Bharat boards, the notified zone. So there also a specific direction to promoting employment, promoting businesses, having simple processes for businesses is in place. TDS prosecution, there is so much complication on TDS prosecution. Even though you have paid, still the section says that you are prosecutable. Now it makes it absolutely clear. Before filing the statement, if you've paid that tax, you are not going to be prosecuted. And 95% of the cases are such only, where the tax is actually paid but paid late. Section was so worded that if it is not compliant with 17B, chapter 17B, then prosecution becomes liable. On the cruise shipping, again, if you see the cruise shipping business for the foreign non-resident entities who want to come in and have this line of tourist development business in India, the end-to-end solution has been provided. One, the cruise ship operator has been provided a 20% presumptive rate. Second, normally the holding company is giving the boat on a bareboat charter to the cruise ship operator. So even that lease rent has been exempted. Entire tax will be, whatever the tax due, 7% of the total revenues become tax. They'll be paid by the operator itself. Your foreign company taxation, that also discussion we had, not with you, but a number of other stakeholders also. And that was absolutely specific, that rates have reduced, 22%, domestic has gone to 22% for many cases. We still stick at 40 plus cess and surcharge. 5% decrease is a major decrease there. So there also, if you see the entire process, we are trying to rationalize the provisions and bring them in line so as to promote business, promote employment. Wherever you see, the entire provisions are of this manner. There are a lot of other provisions, but I'll be happy to answer any questions on specific provisions if they come forth. Otherwise, I think we are satisfied with the budget. Naturally, everybody cannot be satisfied. There will be always some rough edges. Some person will be required to pay more tax. There will, if you require rationalization, rationalization is both sides. Then I have to set the equal level playing field. Naturally, some will have to come up to the field and some rough edges will be sorted out. That is how I see it. I think it shall work forth. Vivad se Vishwas also, it was mentioned. We are bothered about assessee being caught up in procedures of the department. Let him pay some tax and get over with it. We want voluntary compliance. In the last 3-4 years, as I said earlier also, government is focusing on voluntary compliance. On the specific issue of low taxation of 15% on manufacturing, it was already sunset on 31st of March. That time the government made its intention clear. If you see through the act on that day, whatever timelines were expiring on 31/3/24 were extended in the interim budget itself to 31/3/25, and they've been there. This was chosen not to be extended because it was chosen not to be extended. It had not to be extended. 15%, 22% is a fairly low rate. Naturally, we wanted some manufacturing to come in. That was a COVID period. We required some flip, so that it was induced at that point of time. Now we are moving forward. We'll see as and when things come up, we can promote some sectors. That is about it. Yeah. Thank you.
Thank you, sir. I think very simplified version of the entire budget. And the way you articulated it, it's clear to everyone that the government wants things to be very simplified. I have a list of many questions, but I think you yourself addressed many while you're giving a summary of budget. Let me start with my first question. I think again on the simplicity you talked about, at which FM announcement regarding the review of the Income Tax Act over the next 6 months, that was a statement also when she started talking about the direct tax, which is, while this is a much needed measure, the scope for review is not elaborated in the fine print. Our audience wants to understand few things. First is, would the process in reviewing the income tax law, and what would be the process, what would be the process the government will follow in the next 6 months? Whether a committee like DTC, Direct Tax Code in 2010 was formed, does such kind of committee will be formed, and or public comments will be invited? And what would be the key parameters which would govern the framing of the new, income tax law, something of that sort? If you can elaborate on that, sir.
First of all, if you look at the timeline, FM has laid down a clear timeline of 6 months. All earlier DTC proposals or suggestions given in earlier, maybe 15 years, it's been carrying on for 15 years now. 2009 was the first time the yellow book of the small direct tax code came up. And even before that, if you would have history, there were 2 sets of new taxation, proposed new tax acts, which had seen some light of the day. But when you take upon you an onus of framing a new direct tax code, and it is going to take a timeline of 2 to 3 years, if you take that timeline as all earlier proposals have taken, then what happens is you keep on building up that legislation. And in that process of 2-3 years, you feel that these ideas which I am getting for the new legislation are required to be put in the old legislation also. So I keep on amending my present act according to the new ideas which keep on coming in the direct tax code, or the supposed direct tax code which was to come. As a result, when I'm ready with the new bill at the end of 3 years, I already have all those things in the new act, in the old act. So that is why the process fails. That is the precise reason that FM gave 6 months. And if you see 6 months is a short span of time, we will try to simplify the present act in such a manner that it does not unruffle all the standing legal positions. We'll try hard to align the present act in simple language, do away with the irrational sections, do away with the sunset sections, try to work out which sections are actually important. They need to be reworded, which can be actually sunset. The chapter on appropriate authority is not working since the last 20 years, but still it is on the statute. I'm just giving you an example. There are so many provisions on the statute which continue to exist. So we'll try to work around those and see that how we can simplify the act, reduce it to lesser number of pages of better reading. That is the focus. Lesser number of pages with better reading, better readability, clearer understanding, resulting in lesser litigation without unruffling the settled positions of law. That is how I see it. And that I don't foresee a committee being set up, because committee will naturally take a longer time frame, have discussions. Yes, stakeholder consultation is a critical part of any government policy. We might take, before actually finalizing the act, we might have a draft circulated, we might have comments on that draft. We'll see how it develops. It is just in a nascent stage. We have some ideas. The minister has some ideas. We'll try to align what is the requirement of the stakeholders with those ideas and move forward. But yes, a timeline has been given and we will try to work within that time. Thank you.
Perfect, sir. I think we can see a lot of sleepless but working nights again for the department, because the 6 months time is obviously a tight timeline which has been given by the finance minister, but the commitment and the way, the clarity you've given to everyone is outstanding. And as I said, you said that stakeholder consultation is a key part of any government policy. And we're looking forward to being a part of this journey with the department and how we can contribute on that. Now moving to my second question, on equalization levy. We've seen equalization levy 2.0 has been abolished in order to implement Pillar 1 related reforms. In this case, our audience would like to understand the rationales for retaining the equalization levy 1.0, that is 6% levy on online digital advertisement, because there's nothing we have heard on that. So if you can throw some light on that, sir.
Okay, fine. First of all, Pillar 1 and Pillar 2 discussions in the inclusive framework are absolutely classified at this point of time. Whatever India is discussing and Indian position is presently, it is not, I am not in a position to share what the Indian position is in the inclusive framework. They from time to time declassify some informations. They might declassify some information in the next 2 months. So you will get to know what the position is. The removal of equalization levy prima facie as the amendment states is for the 2% equalization levy. If you see the 2% and 6% equalization levy, there is a substantive difference between the two. The 6% is a B2B equalization levy. The 2% levy is a B2C and as well as B2B equalization levy. So that had created compliance issues. The e-commerce operators were actually having severe compliance issues on equalization levy. At the same time, the revenue positive impact was very small. About 2,500 crores were being collected. So government has taken a decision to stop levying equalization levy from 1st of August. What relation it has or does not have with Pillar 1, I at this point of time cannot comment. The globe is discussing a multilateral instrument. Pillar 1 as well as Pillar 2, both are separate parts to that instrument, and the discussion is going on. A finality has not been achieved. As soon as finality is achieved, then we can see how we progress further. The 6% is naturally presently applicable and will continue to apply till we come to a certain finality on the other condition. That's it.
I just have one
Thank you.
intervention here, Ramanji. Now, because we are here with the US chambers and the whole US 301 USTR issue and extension till June, I'm just hoping, because as a chamber, our job is to facilitate trade and services both ways. I hope this will assuage the Ministry of Commerce interactions on the USTR issue, and hopefully the extension till June, and with 2.0 given, maybe we get a little more elbow room, because nobody wants to be seen being touted on the fact that, okay, the sword of USTR 301 still hangs. And this was something which we've also taken up with the US side also in the past also, that they should have a little more considerate view on this. So I'm just hoping that we'll be able to make some ends meet. Hopefully with this, at least as a starting point. I completely appreciate the Pillar 1, Pillar 2 developments, and and these are closed room deliberations at this stage. But at least from that US standpoint, if this message can go, and somewhere Ministry of Commerce and the Ministry of Finance can have, I'm sure these are being. They are also having a keen view in terms of the way we are moving forward. So I hope this brings some sunshine on that count.
Yes, sure. I would just reply what is. The 2% levy as of now has been removed from 1st of August. Whatever consequential actions or discussions the Commerce Ministry needs to have with the US can have. The factual position on the law, I've made it clear. There were compliance issues. There were compliance issues between the 6% and 2%. There is a substantive difference between the two. Moreover, along with the equalization levy 2% removal, we've also withdrawn the exemption under 1050. If you've seen the amendment of 1050, so we naturally go back to the old position of taxing services under FTS if they are so taxable. So the position which was there has been restored as of now. If it has consequential benefits to the Ministry of Commerce or the External Affairs, it is up to them to take it up. As far as I am concerned, or the TPL division is concerned, we are focusing on the prima facie issue of the
Yeah, and one vexed issue of this whole overlap of 2.0 and 1050, and with the whole withholding taxes, courts looking at on FTS 10 and then being challenged by non-resident that it should be 2, and courts giving some pragmatic decisions, which are reported judgments in Amazon, etc. 8 to 10, 12, so on and so forth. So I hope this brings some, as you rightly said, it sends some very positive news to the foreign community, at least on the space which e-commerce operator and supply and services do hope. So I think this should bring.
Yes, absolutely. That is all part of compliance issue. That is everything, whether it being classified as 2% or 10% or services or FTS, that is all a part of compliance issue. So we have to see it in an integrated manner, that we have simplified compliance, ease of doing business everywhere throughout the whole budget. This thread is running. There are 4 or 5 threads which are running. This is one of them.
Akhil, back to you.
Yeah, thank you. I think just a minute. Yeah. And now to the next question. I think it's not a big, I think Mr. Chopra can clarify in a minute. So the budget has proposed, to classify income from letting out of house property, residential house property as income from house property instead of business income. Will this impact the residential house property owners who are letting out their house properties for business ventures? I think what's the rationale, because people are looking for a lot of clarity, because we've seen a lot of people have given to the hotels Airbnb. The people are given to the Airbnb, whether this will be classified, because till now they've been classifying this as a business income. It will become a residential income now. People given the houses to OYO, or they've given to the shops. We've seen, in multi-story houses these days, on the ground floor, there are a lot of shops, commercial activities are happening. So how to take this, so we're getting a lot of queries on that. So we thought we'll check with you.
If you see the provision section 22, it is absolutely clear. House property incomes means house property income. any income from letting of out of house or part of the house by the owner other than any house which is occupied by him for the purposes of his business. That phrase, only that phrase is available. Where it is occupied for the purposes of his business is left out. So, prima facie, present amendment is a clear explanatory amendment in section 28. It is not even put in 22.
Yeah.
That the plug which has been put in place is that you have a flat in Basant Vihar and you are letting it out to a tenant and classifying it as business income, claiming depreciation on that and paying zero tax. That is a clear misuse of a provision where rental income already allows you a total deduction of 30% and nothing else. You take specific cases of hotels, whether when you are running a hotel, when you are entering into an arrangement with a hotel to run, these types of outlier cases we will discuss in the explanatory circular which comes in January. So, prima facie, any income from house property is required to be classified as rental income, eligible for 30% deduction in 24 and nothing else other than interest. So, if that is the position, the intention of the act is very clear, but if you want to manipulate the act and pay zero tax on any rental income, then perhaps that is not the whole scheme of things. That is not in the whole scheme.
Yeah.
Right.
I think Mr. Chopra could not have been, better right from the decisions of Sultan Brothers, Raila, Chennai Properties, Kanankara, the whole judicial pronouncement of Supreme Court, and these decisions go back to, almost 60, 70 years. Spate of judicial pronouncements have held that you just have to figure it out. And that's what I think the reason of this particular. Oh, this is actually an emphasis or a matter of emphasis to suggest the fact. Yeah, I think it's very fair, and rather it will help in mitigating the litigation with regard to characterization. Yeah.
Absolutely.
Thank you, sir. Now, before going to the next question, I'll ask and encourage my panelists, though Mr. Aseem Chawla has been getting into a lot of dialogue and conversation with you. Richa, Arun and Dr. Upasana, you have anything to discuss and, talk because now, Raman Chopra ji has only 4 minutes left. He has another, another commitment at 4.
Sorry, I have some engagement at post 4.
Yeah.
Sir, I would like to ask a question around the employment incentive there on 80 JJAA. So there are a lot of interpretational issues which are coming up around those, which can become major litigation triggers going on. So is the government thinking of issuing some FAQs around those provisions so that, taxpayers can get some more clarity around that?
In prima facie, nothing has been broadly escalated to us. You kindly escalate to us or the member in IT on this issue. If there are some critical clarifications which you require for the purpose of 80 JJAA, we'll certainly be happy to give those clarities. The section has not changed in the last 4 or 5 years. So if it still requires clarity, then it is a matter of concern. Then TPL actually comes into picture that even if in 4 or 5 years the provision is not clear, certainly you need to clarify. If you feel that there can be some issues in the wording of the section or the provision per se which requires a change, do highlight it, raise it through the chambers forward. We'll consider it in the February budget. We are absolutely open to such suggestions.
And thank you, sir. And also around 43BH, there was the FM had indicated on several forums that is a provision that may be reconsidered, because again, on the practical challenges that are being faced while dealing, with the changes that have happened in terms of MSCs, there could be transition, they become medium enterprises or vice versa, or what is the date on which you need to consider that particular entity as a small or a medium entity. So there are a lot of these issues which are there. So, but however, nothing has come up in this budget. Is some clarification coming subsequently around that?
The issue in the amendment, if you see 43BH amendment, the amendment is principally referring to section 15 of the MSME Act 2006. There is no other timeline per se prescribed in the Income Tax Act. We had a long discussion with MSME Ministry on that. There are 2-3 issues which keep on coming, that who all are covered. What is the universe of the applicability of this provision? That is the first thing which comes up. The second is how to modify their section 15. Whatever modification has to come with reference to 45 days or some sectors being given more time, such as the textile sector or the export sector, that amendment or the carve out has to be there in section 15 of the MSME Act only. Because we are simply saying that whatever time is provided in the MSME Act, within that time it is paid, or it is paid in the financial year, then it will be allowed as a deduction for the corresponding financial year. So if they make a change, it will automatically reflect in our provisions. We do not require a separate assessment or change in our provisions. They have already made a clarification, I think on 14th of June or something. You can check that out, about the universe of applicability of MSME. So a large number of maybe retailers or so have been exempted from that. You can read the exact wording of the circular. It is by the MSME Ministry. So that has assuaged some rough edges on MSME thing. In fact, in the last 3 weeks or so, I have not seen too much news on MSME. I was getting 10 letters per day, so now they reduced to 1. So I think some problem has been sorted out.
So maybe, sir, we'll send you one more then.
Yeah, sure. Okay, fine. Thank you. I'll be happy to accept it.
Thanks, Richa.
Thank you.
Mr. Chawla, Dr. Upasana, anything specific? Because I have 1 or 2 questions before we ask Mr. Chopra.
I just have one, that looking at the inventory of cases, and the power of set aside getting introduced for CIT appeal on ex parte, and hoping that there'll be more capacity building with regard to first appellate authority. The major litigation is clogged, which we discussed, is at the high courts or at the first appellate authority. I just hope Vivad Se Vishwas scheme focuses more on the litigation which spun out of the 3 years of the new reassessment regime between 21 and now the new rebooted reassessment regime, if I were to say 24 version. If the VSV scheme focuses largely on this proliferation of litigation which we had in these 3 years, and I understand matter is sub judice at Supreme Court level, at least that will also help in clearing a lot of inventory, and maybe areas of taxes which are deservingly due are also which are locked up in litigation are also I mean, this is a good opportunity for taxpayers to decide that whether they want to perpetuate or not. So that would be a suggestion to Ramanji and his team. Yeah.
I too hope so that this is the course which takes place. 148 we have changed, made it simpler and clearer. For appeals from 2020 to this date, we've got a lower rate than the earlier appeals. You can see that also. So most of the appeals are in 148, or most of our assessments are in 148. So I hope VSBS is going to address the specific issue you are saying, that 148 appeals are going to be settled through VSBS. So it will take up a lot of appeals. That is my take on it.
Yeah, I'm hoping, considering that there's a fair bit which we are trying to hold for the revenue in the courts. If this gets taken up, I think it's win-win for everybody.
Even the set-aside power. In fact, there were so many, after coming of the faceless, so many assessments were made ex parte. Unnecessary demand keeps on burdening the department as well as the assessee. The same case has to be remanded back to the assessing officer for disposal. It is de facto the same thing. So we brought in the set-aside power just in 144 cases, that it should not be interpreted as prolonging litigation by a cyclic process. Only in cases where there was no hearing given to the assessee, or the assessee was not able to avail of that hearing, that has been set aside. Demand goes, he appears before the assessing officer and gets settled.
And sir, before Akhil lets you go, you just have to give your solemn promise that if there is something on pillar 1, pillar 2, you will allow a similar audience to us. And I can tell you for the record, that the day we had to have pre-budget consultation, it moved from 4 or 5 till 7, and we got a revised time slot at 7:15. And those are the working nights which Akhil and Ramanji were telling. And at 7:15 also, everybody was there on their toes, and it continued. Yeah. So hats off to you, sir, and to your team.
Thank you so much.
Thank you. Thank you, sir. My last question. I think there's a lot of questions which are in the chat box. As you said, simplification is the theme, be it capital gain, charity reopening of assessment, Vivad se Vishwas. We talked about TDS provisions and all. On the capital gain, you've seen there's the indexation is no more, and that's the government has done away with that. So people are curious to know whether it is retrospective, is there any grandfathering, or it's a prospective update, because just some highlight some, because it's not clear. It's just that indexation is no more applicable, and where there will be any grandfathering or that, something of that sort.
So if you see the process of indexation, earlier we had an 81 timeline. It was later revised to the 2001 timeline.
Yeah.
So what was there was the indexed cost was shifted to 2001. So if you have any property prior to 2001, it gets automatically indexed up to 2001, because in my section 55 subclause B, I still provide you with an option to take the FMV or the stamp duty value on 142001. So that timeline is already available. So there is no grandfathering per se, but properties prior to 2001 get the timeline or indexation up to 2001, and post that a clean regime of 12.5% on consideration minus cost of acquisition is there. So it will operate like that only. There is no specific grandfathering for any properties acquired after that. That is how it goes.
Yeah. Thank you, sir. Thanks for your time. Thanks for your valuable inputs. We wish you all the best, and we would like to see you again next year, or as Mr. Chawla said, whenever the government has any updates on this group wants to reassemble and do some kind of conversation with the interest of everyone.
Sure.
Thank you, sir, once again on behalf of the entire chamber and our panelists and the audience who's listening to you.
Thank you so much. You're always welcome. Thank you.
Thank you. I think now let me go back to our other panelists. I'll have a lot of things for Mr. Chawla to talk about. I think again going to the capital gain tax, he briefly touched about that, and just wanted to understand from you, Mr. Chawla, though these as per you, these are the much awaited and long pending measures which needs a lot of clarity, but just wanted to request you to share your views on how these parameters and has impacted the market, whether in the near future, especially because of increase in the capital gain rates by 2.5% and the increase in SAT rates.
So Akhil and the audience, the philosophical answer which I had parked we were keen to hit Mr. Chopra was that the tax system is part of the larger grand policy. It's part of the larger macroeconomic policy, and by no means tax drives, but it contributes or aids to the larger policy or economic policy, which helps us in taking certain decisions. The way, and 2 or 3 months ago, the whole F&O thing really captured the imagination, and it coming into the forefront that how F&O has led in many pockets. And if you heard the Honorable Revenue Secretary yesterday and the Finance Secretary yesterday, that majority of these were in the age group of less than 35. Yeah. And SEBI in the last 3-4 weeks made a lot of positive noises about it. I think this was in works. The rationalization of tax rates and indexation has also been explained, and according to the North Block, that there have been a lot of empirical study with regard to why they picked up this median rate between 10 and 20. Now, one may argue that this could be enhanced to 15 over a period of time with regard to the rationalization of rate. But the philosophical answer, and this is very personal take on this, is the fact that if you start disparaging your day job, hoping that the market gives you enough return, and here I am working 16 hours a day, logging my timesheet, it's easy for me to make money on stock market. I'm not saying it's a sin tax or it's a sin, but you need to pay more tax and to make it sound a little more equitable. If you make more money, then doctrine of proportionality, on which laws are tested for their constitutional validity, also suggests that taxes need to be proportional. Now, I am by no means suggesting the fact that, oh, please tax exorbitantly capital gains tax. But all that I'm trying to say is that if you make money, then you pay taxes. And why should there be separate asset classes with regard to taxation? You remember Mr. Jaitley introduced 112 capital A only with this rationale that there should be less inequality in terms of discrimination of the assets. And if you are telling me that India is going to champion your $5-7 trillion economy purely on the basis of stock market, then I think certainly I would be holding a very wrong premise, and I'm happy to be corrected on that. So that's the broader overview, and hopefully things like, and see the amount of litigation which had cost only on the whole issue of section 112 and indexation, whether you are entitled, you're not entitled, right? And you had those decisions, Bombay, Otis Elevator, so on and so forth, and the fact that the whole issue of translation, how many of us were very conversant with income tax rules that you have to first translate and then go back to home country and then calculate the tax rate? I mean, what are we here trying to suggest? I think the intention is to make it user friendly. And insofar as the other related thing in your issue of capital gains tax is with regard to the STT bit. I think STT collections over a period of time has only improved, which is a measure of how much trading activity it is done on the stock exchange. So and if you are going to trade more, you need to pay more. It's like using a highway toll, I mean, if you motor along, then you pay more STT. I just don't understand the simple rationale of that I should not be paying taxes because this is a money earned on stock exchange. That's the bottom line of this.
I think fairly, I've liked your philosophical answer, and I've made a note of this. Maybe I will use it, in my future conversation wherever we. So I'm taking your permission, here. And as for you, looking into your responses, that this STD and the increase in rates will not impact the market much. The market will gonna increase only, and we have seen that trend in the last 4 years. And you rightly said, a lot of young generation is interested and actively participating in that. Now coming to my another question related to insolvency and bankruptcy code. You've seen a lot of certain changes suggested by the finance minister in the budget, and further proposed strengthening of tribunals and setting up of additional appellate tribunals to speed up insolvency resolution and debt recovery. How are these measures expected to impact, the entire financial sector, or have confidence of the investors in the regulators?
Okay, so a little bit of red herring, since I represent the revenue in court, so therefore you and the audience have to bear on that count. And so these are again my personal views. I'm happy to listen to this. Now let's dovetail. We are looking at tax, and we are looking at insolvency, and we are looking at capacity building. Clearly, in the last 2 years, if somebody And we as chamber have a lot of industries who are part of our chambers. In fact, we thrive for industries only, trade, commerce and services. Majority of industry stakeholders, whether they are in trading, manufacturing or services, have had one brush with tribunal for one reason or the other, right? Apart from the insolvency piece. I mean, you need a capital reduction scheme, you go to NCLT, and so on and so forth. Of course, the larger amount of spotlight was the IBC bit insofar as NCLT is concerned. Now, to me, NCLT was long overdue for capacity utilization. The physical infrastructure, the number of honorable members, the disposal rates, it's completely swamped. It's overwhelming. And on any given day, it could end up being a disappointing day either for the lawyer or the one who is seeking some kind of relief.
Yeah.
And maybe the institution is keen, but they have less hands and therefore they are constrained. So if this consciousness has come in, which I think there were a lot of knocks on the door, and I think the Honorable Finance Minister in her yesterday's primetime interview did suggest the fact that and during her speech also, and post budget speech, the conversation which she had was the fact that I acknowledge and I realize the fact that we are short of hands. Now, I am hoping that with the new service rules of tribunal, which also was a subject matter of litigation in Supreme Court in Madras Bar Association case, twice the matter went up to Supreme Court. Now, with the present service rules, if the government is able to attract a nice talent, right, and who are willing to join tribunal, and tribunals are spread all across, then I think the backlog of cases which is rising on a daily basis, that if the disposal is less than the institution of appeal, then you have a problem, right? And these days courts are just trying to manage their disposal. In fact, Supreme Court comes very heartening out if their disposal is equivalent to fresh filing. At least the pendency is not increasing incrementally. However, for NCLT, which to me is a premier tribunal now, because the scope and ambit of NCLT in terms of redressal of various laws, be it IBC, corporate law, and the other laws, the wingspan is so much that we need more members, more benches, and trained members, so that the technical domain expertise of a technical member is put to use on a readily basis. So if in the next 12 months we see more appointments of members and more setting up of benches or additional benches within a particular center, so to speak, I think it's going to do great for the larger society also. Now, coming to the tax play on because we are doing post-budget tax. Now, we all are aware of the decision of Ghanshyam Das of Supreme Court, where you had a situation that whether tax claims have been raised, and if they have not been raised, applying the clean slate doctrine, which has been confirmed in Tata Steel's case also and reiterated, right? If you have more capacity, then those claims can be filed in time, and there are cases where legitimate revenue is also being lost. And application of clean slate theory means that, oh, if you failed, sorry, you missed the bus. Now, there could be a legitimate claim of tax which gets lost because of the clean slate doctrine. Now, I'm not advocating pay more tax, but I'm only saying pay right amount of tax, right? And courts, now these are tax courts or high courts with tax benches, are inundated with a lot of IBC related matters now, as a consequence, where the taxpayer is saying that, oh, I can't be foisted with a demand now or a notice because I went into the IBC. Now, there's a lot of back and forth happening on that in the light of the Supreme Court decision of the Ghanshyam Das decision. You have the Rainbow Papers decision also of the Supreme Court, and you have one more decision of the Supreme Court, which also, prescribes a waterfall mechanism. So I would be, as a student of law and tax and economy, would be very heartened if in next 12 months you find 50, 60 appointments of members or even more to various benches in the present service rules, and keeping in view, and the tribunal needs some very solid physical infrastructure also. I mean,
I think wish Mr. Raman Chopra would have heard you, and but will your two asks on appointment of members and having a robust infrastructure so that
Yeah.
this machinery can function effectively. But we'll see how we want to, because he said we are in the process of simplifying. Next 6 months is a journey which department has to cover, and we'll see how we can put this up. Thanks. That's why I've kept this question for you, because I know you've been very active on that, and thanks for your insights as always. I have one last question, but I'll come back to you because there are other panelists.
Yeah.
And let me go to Dr. Upasana now. Dr. Upasana, you've talked about customs duty removed on cancer drugs. Is a welcome step from the government. But I correct me if I'm wrong, it's only 3 drugs on which the government has removed the duty. There are many other cancer drugs also, on which the government should have thought about it. Just wanted to, understand from you, do you think there's much more than that is expected from the government towards cancer care and overall healthcare in India? I just wanted to have your thoughts on this.
Yeah, thank you. Actually, like I work with the FICCI for medical value travel, and we were expecting more for medical value travel, that there has to be some budget for healthcare, so that we need to have foreign currency, and for foreign currency we need to earn in foreign exchange. So I was expecting, but same time, like there is a few steps government has taken, because in our last budget we got some nursing colleges, and this budget there are more medical colleges. So hopefully when they will understand, and we will do, I mean, we means healthcare industry will do good job, then hopefully we will be get more in the next budget. Hope I am really hopeful, and I really wish that industry should come together and then send their note. So like FICCI is taking, CII is taking, but that is an overall perspective of industry. I want that significant industries has to give their what they want from the government before budget. So maybe then they can understand ki if they are giving us, we are going to make it double or triple, or sometimes it's 10 times. Like we are, especially in medical value travel, our Honorable Prime Minister wants to increase medical value travel in India with the help of Ayush and other ministries. So I was really expecting more, but no worries. There is always next time. So maybe in next year we will get more.
Yeah, certainly. And I think being a part of this chamber, we can make some representations as well from our end. My last question to you, Dr. Upasana, we've seen in the budget that infrastructure is one of the priority areas for the government, with an allocation of 3.4% of our GDP towards capital expenditure. The government has encouraged the state governments and the private sector also to participate on this front. So what are your thoughts on the private sector participation and overall impact of these measures on the infrastructure development?
So I think infrastructure development is the best thing, because if government is focusing on that, and you can see that is visible. Our roads are very good now, and you can see lots of different bridges in every big city. So in private sector also, if you see, like we are making very good hospitals, so it is helping. Like private sector is also doing very well, and government is supporting us, so it is going to be win-win situation for both the parties, for government as well as private. And infrastructure is the thing we can show it to the other countries, so they can also feel that they have to invest in India. So for getting more persons from different countries to come to India, to invest in India, we need to showcase our country and how we can show. We can show through infrastructure. So that is very important.
Yeah, because you've talked about, medical value travel, and then this can make that, this can contribute a big time on that. That's how we can support, the people coming from different part of the world to India. The infrastructure should support that. Thanks for your time, for your valuable inputs, insights. Now let me go to Riksha Sani. Again, on tax, because as this is primarily the post-budget tax discussion we're doing today. So Richard, I think you've heard Raman Chopra talking about, simplifying a lot of things, and he touched upon on TDS, because there's a lot of, um, cash flow of the refunds which are going. So they've reduced many, TDS percentage from 5% to 2%. However, considering that the government now has multiple technology-enabled ways of tracking those transactions, because why TDS used to be deducted, traditionally is to track that, the payments going to the people subject to tax. So this TDS do the tracking, but now government has a lot of technology to track those transactions. So do you think there is a merit itself for this, TDS regime to continue, or more simplification is required there? Your thought on this?
No, absolutely, Akhil. There have been some steps that they've taken in this direction during the budget. Some rates have been reduced, and in fact, he mentioned that this was on account of refunds that were being issued around that. So, which means that there is a data analysis happening around this. So that also shows that the government is analyzing whatever impact it is creating around these provisions and making suitable changes. So that gives us more hope on certain other aspects that we would like to see in the TDS regime. Now, as you rightly said, when these provisions were first introduced, they were meant to be the primary source of collecting data for the government. But now things have changed. Technology has improved a lot. There is a lot of data available in the GST database. There are information exchanges which are happening with the different departments, different government departments, different organizations, different countries. Also, the SFT framework has been enhanced or strengthened quite a bit. So there is a need to rethink that whether TDS is still required to be a primary tool for collection of data, or can something else be done? And all this possibly could be done in a more revenue neutral manner without increasing compliances, or in fact reducing compliances for the taxpayers. So I guess a complete revamp is something which maybe the government should look at in the review that they are proposing within the next 6 months. So basically, I think the couple of suggestions could be around that use of these, the data which is available in the GST portal, the other departments, the SFT. Also, they could just analyze, and I'm sure some studies have already been conducted around that, which are the key sections which are contributing maximum to the exchequer. So those are the provisions, maybe those 4, 5, and it seems there are maybe 5 to 6 ones which contribute on a major basis to the exchequer. Those could be retained. The others, which provide only an insignificant contribution, they could either be clubbed together or they may be done away with. So overall, there would not be any major impact on the revenue collections. The other is that there is a lot of litigation around what is the rate to be applied. And that stems from the fact that there are rates which range from 0.1% to 40, which now becomes, say, 35. So there are numerous rates around that. There are numerous thresholds. So, if the government feels that there are certain areas where data or transaction trail cannot be established through other measures, then there could be just 1 or 2 rates which could be given, so that purpose of having that data trail or the transaction trail get met. However, there is no litigation around the interpretation on the correct rate. So a lot of assessees get involved in these litigations, which are very time consuming. So that could be reduced. Then again, those thresholds of TDS sections, there are numerous such thresholds which have not been revised for several years. In fact, there are studies which show that in many such cases, there are refunds being issued. So those could be reconsidered and seen if, they could be brought more in tune with times. Also, we've seen a lot of litigation around the mismatch with income and the TDS in the year in which you are claiming. So that reconciliations become really problematic in many cases. So maybe it's time that the government considers something like a TDS ledger, where, once that entry is done, then you can claim it, maybe something similar to a GST ledger. So that could again be a big simplification move, which can reduce a lot of compliance burden for the taxpayers, but there will not be any revenue losses per se for the government. Also, whether at all we now need the TDS certificates. All the data is already available under the AIS, the tax information system. 26AS is already there. Do we really need to get into that exercise of issuing TDS certificates? Can that be done away with? So I think all these suggestions, if they can consider, it is possible to reduce compliance burden on the taxpayers, but it can be done in a really tax neutral manner. So that's all I think from a TDS simplification.
There's many to take from here, and I think we as a part of representation, both from a firm and chamber perspective, can give these kind of inputs, because as Dr. Raman Chopra ji said, they are in this journey. Now, before we come back to you, Richa, on the concluding remarks, let me go back to Mr. Chawla again. Mr. Chawla, last question to you. Though India is one of the highest recipients of the FDI inflow in the APEC region in the last fiscal year, the economy survey results show that there was a slight decline in the FDI over the last fiscal. Do you think the proposed reduction in the tax rate applicable to foreign companies from 40 to 35%, coupled with easing of that FDI forms, would go towards increasing flow and investments into the country now?
Well, all by itself, the announcement of reduction of corporate tax rates from 40 to 35%, all by itself may not be the real overarching reason, but it could be certainly a sweetener in the entire deal. But yes, there is a fair bit of concern, as you rightly alluded. The FDI inflows into India have shrank about 3.49% on a year-to-year basis, especially from the intermediate holding jurisdiction, as we colloquially refer, Mauritius, Cayman, and Cyprus. I mean, I would not hesitate to say that most of the foreign FDI which is originating from Mauritius, Cayman, or Cyprus is actually an FDI originating per se, being the source country in that sense. Of course, Singapore, US, UK, UAE, lately UAE has been one of the larger ones in terms of a larger investor as a country over the last few years. So yes, but the other larger picture which you have to see, that it's not only India, and by no means this should give us any comfort, but absolute drops were registered in France, Australia, China, US, and India. So I think there is a fair bit of insular looking into the global world order. Maybe the world is trying to reboot itself for a temporary phase before the winds of cross-border trade and investment start streaming both ways. Do we need FDI? Answer is absolutely yes. Do we need more? The answer is even absolutely yes. So whether any relaxation on Press Note 3 insofar as land bordering countries, and for the viewers and audience, Press Note 3 came around COVID time when there was sudden spike in the FDI from China, and the case in point was HDFC Bank and its associate companies. And in the backdrop of Galwan, the government came up with a press note 3 suggesting that all investments, regardless of being under automatic sector, will have to go through an approval. And then we had the vexed issue of what happens to investments coming from Hong Kong also as a collateral, whether Hong Kong is part of China in the sense of interpretation of the Indian regulatory framework is concerned. So all in all, what has happened, we've slipped 7 notches to 15th rank in terms of the UNCTAD World Investment Report 2024. Is there a case of coming back? I think the PLI, ELI regime and making and pushing the whole Make in India theme with some amount of rejuvenation, with government coming up, looking at some more centrally sponsored scheme, etc., should help. But clearly, India needs FDI, and I am reminded of the statement which was made at the floor of the House on 10th or 11th of May 2012, when the infamous Vodafone retrospective legislation was being passed. That India will not eat lizards if we don't get FDI. I think that was too overambitious a statement, but then it's beyond my pay grade to make a comment as to what was being debated in the upper house of the parliament. Clearly, we are a capital importing country, and therefore we still need more FDI, especially the FDI which stays here, and therefore the whole question of the hot money coming and getting out on the stock market. So we need some sustainable foreign direct investment, and with an ecosystem which provides certainty and an assurance to a foreign investor that your capital is safe. Maybe Akhil, if we are able to reboot our bilateral investment treaties, which is also part of the larger ecosystem, and we decided to give up on all the treaties, and now we have a new template, and we are moving the world at large. And the UK bilateral investment treaty is still on the works with new regime in UK, assuming that we have a continued regime, whether the Deepavali deadline of signing that FTA, which everybody was hoping that this will happen soon. On the US side, I think we've been working, as we understand, for almost 15 long years now on a FTA. But I think if we can at least get the UK off the block, and if we can do something with EU, I think it will be a great achievement, and India playing a larger role now in the global center stage. I think it is high time for that role to actually graduate, and maybe things take time. Being a solid partner, I would dream of India being a full partner or a full member of ASEAN. Why can't we be a full member of ASEAN? So these are things, but I'm sure these are simple, easy statements to make. There's a lot of work which is going behind the scenes. But yes, tax rates should at least make that selling point. Yeah.
I think wonderfully said and stitched together everything, Mr. Chawla. I think before we conclude today's session, I'll ask all the panelists to give their concluding remarks, any hits and misses. We've talked about, I think, as Raman Chopra ji said, there are 99 clauses which has got change in the proposed budget. But we've not covered 99, but we've covered almost more than 50. I can say that, whether it's Vivad Se Vishwas, it's capital gain, it's insolvency law. We talked about buyback of shares, equalization levy, TDS regime, whatever one can name. We've discussed in this. It was very enriched discussion we had today. Mr. Chawla, starting from you, any hits and misses? Obviously, ye Dil Mange Bo, there is a long list which is always, expectations are there that next time we'll see these are the changes which should come. But any hits and misses from your side before we go to the
I think the hesitancy in bringing the profit attribution regulations, which were unveiled, I think, a few years ago, maybe it's in the whole pillar 1, pillar 2 discussions have taken the center stage on it. I was hoping that regulation could have got formalized in terms of a statutory benediction. That was one thought which I had in my mind. Second is how do we manage this burgeoning of litigation, and if what we heard from the Honorable Joint Secretary, if that is on the cards, and the VSV helps in clearing a lot of dockets, because that's a zero-sum game, and hopefully the rebooting of reassessment now with reassessment 3.0 and the new search provisions, which somewhat give a flavor of chapter 14B, which we had till up until 2003, if you remember, coming sort of back. At least the sections read the same, 158 BC BD. If that does not proliferate the litigation which we've seen in the last 24 months, I think that will help in bringing a lot of sanity back, because the whole reassessment and the search provisions between 21 and 24, so to speak, now that we have a stopgap date, I think it took the better of everybody. So yes, and a very circumspect approach which has been exhibited by government in terms of not putting GAR into too much of service. We hardly have matters. Of course, one which has reached Supreme Court. I think these are very strong consolidation signals of the government. And as I said, the budget pretty much has left all aspects touched. So in my view, yeah, it's a good forward-looking budget. Yeah.
Thanks, Mr. Chawla. Richa, concluding remarks from your side. Any wish list which is still to be? Obviously, you've talked about much, but still.
So my missus, I think he knocked off there itself that manufacturing 15% is not meant to be. And I think for pillar 2, since these discussions are one, we were really hoping for a roadmap or some indication on when the draft legislation is to come. I suppose that we need to wait for a couple of more months, as he indicated. I think I think there are provisions which are providing relief to a lot many taxpayers, and in fact, every category of taxpayers. I'll just touch upon the 3 ones and some things that taxpayers should keep in mind. Angel tax, a brilliant move to take it out. It's just that taxpayers still need to be aware that they have to do Section 68 compliances. So the source, the explanation regarding the funds, they still need to take care regarding that. The other is regarding the EL gone. Yes, that again is a welcome move. A lot of litigation goes away. But remember, there is an SCP provision under the Act. So for those who are not availing the treaty benefit for any reason, you are a transparent entity or something of that sort, or you come from a country which does not have a tax treaty with India. So even in those situations, those e-com operators would still need to figure out the SCP provisions. On the buyback tax again, non-residents can take the benefit, the credit can be taken in the respective country for the taxes paid. However, they may need to evaluate, depending upon the treaty in which they fall, the exact language of the treaty, to see whether this would be construed as dividend there, or would they want to explore the capital gains provision there. So you need to do a careful analysis of the treaty to further assess the impact on you. So I guess with that, I'll conclude my comments.
Thanks, Richa. And Dr. Upasana, anything from your side?
Definitely. Rather, I think I am going to write a letter to our finance minister with the help of our association, because they want more medical colleges and public-private partnership. So for that, we need some relaxation somewhere. So that is how I want. And next thing, I wish that in next budget, at least healthcare has to have some good amount of money in budget. I am actually extremely surprised that this time we have not. Last time it was better because before that no government was thinking about healthcare. So last time I was happy, but this time I was expecting more. So we are trying to get our best. We will try to, yeah. But
Yeah.
otherwise, overall, if you see, it is good budget because empowering women and then farmers and basic need of everybody they have covered. And I'm very happy they have made cigarette very expensive. I want it should be more expensive, so everybody should not consume it. Yeah, thank you.
Thank you. Thanks. Is Mr. Karna on the call? Mr. Karna, anything from your side? I don't think.
I think Mr. Kanna has left for the meeting.
Okay. I think with this, we can conclude our discussion for the day. I'll again like to thank our panelists, Mr. Chawla, Richa, and Dr. Upasna for your time, and our participants for their patience and listening to the panelists and asking a lot of questions. Hope we try to cover everything. On behalf of the chamber, I would like to thanks everyone and see you next year. Thank you.